Hello everybody. I'm your boss, Joe Boss. And welcome to another week ahead plan. Not too much was expected this week. We expect things to kind of stay range bound. But we ended up staying pretty risk on for most of the week for a lot of assets. So let's go ahead and do a of what I expected to happen this week from last week's. And you can see my expectations here were for a little up on Aussie dollar, and then down, and then up, which just flat out was wrong. I set this little green line here as the risk on risk line, and you can see that was pretty on top of it. So we identified the risks for this week of going higher for this. Going into next week, we have some negative yield spreads at the moment. We're kind of in no man's land here on the monthly. The yield spreads are slowing down short term here and on the more intermediate term as well. So I'd be cautious going into next week on the... let's go ahead and look at the seasonal data. Yeah, most of the closes next week. Look like Outlook notes. Oh, I think that was the wrong one. Here we go. Yeah, everyone in the trading group, you can get a 10-day free trial. And you get access to all these indicators, probability pivots, which are these. And then the range probabilities here, which are these. Seasonal forecasts, we'll get into those. And the yield spreads is actually this indicator, the thing that colors these bars green or red. Really good for FX. They're a known leading indicator for like the last 40 years. They don't describe everything that leads FX prices, but when you go ahead and you check out some of these outlooks here, especially on the Eurodollar side. So if I check out Eurodollar, oh, maybe it was for a different asset. Yeah. You can see yield spreads here for Japan, dollar, yen. A lot of focus on the yield spreads. Moving this thing. A lot of focus on yield spreads from a lot of the outlooks that I read. And we'll be going through part of this document. We got a summary up here at the top. I know the thing's 11 pages, but I went through about 60 pages to find like the key pieces in those 60 pages. Anyways, this is probably the quote-unquote worst I did this week as far as outlooks have gone, as far as expectations have gone. If we also check out New Zealand dollar, I think I did something similar on that one. And we got some good New Zealand news. However, this one was a little different. So while I did set some bearish expectations and then bullish, I got the timing on that right. And I kind of set up two trade plans here for New Zealand, which was, hey, pull back into this spot, catch a long. And that was actually right at the bottom wick right there. What a setup. And then this was kind of the backup, which was, hey, stop out, try again. But man, from there to here is like 133 pips. And this is the magic of range probabilities. Hey, some of your highs in really, really big moves, you get your high for the week somewhere around here in this bump in the distribution of where highs come in for the week. So remember, if you want, go ahead and start a 10-day free trial on this thing. Okay. Let's go ahead and continue on. So yeah, I think the rotation on the timing for this was correct. Obviously, I didn't catch the magnitude of this move, but being right on the general direction and then updating your expectations as you get new information, all well and good. The yield spreads aren't so positive going into this week. There's actually quite a bit of RBNZ stuff we can check out. right? RBNZ is expected to stay on hold, but not turn more hawkish or dovish until the next set of economic releases. So it'll be interesting to see if we get any commentary from members of the RBNZ, either getting more hawkish or more dovish. But again, I'm just going to be repeating myself here. We got to wait till the next set of economic releases, probably until they start changing their tone more significantly. We do have some other economic events to check out here, but I'm just going to review this stuff here real quick. Euro dollar, I was on this one. Worked out pretty well for me. I did set some more bullish expectations, and I did set a bearish expectation to the close. So net, the rotation on this was pretty pinpoint, right? Long from here, short from here. But you can see I caught along here from last week, still holding on to that one. Or rather, a week and a half prior. This was kind of interesting. This week I said, hey, I need negative yield spreads because I was taking shorts over here. But when the yield spread started popping off, I'm like, okay, time to hop out of these things, flip long. You can see that. And I was like, hey, I need things to actually turn red here on these candles, like back here, before I get explicitly bearish. And so when I was looking at my odds, I'm like, this is kind of what it's telling me to expect based on what I'm reading from the outlooks and these yield spreads and commentary that I'm reading from stuff that's not on the charts. I'm not so sure if this expectation is what I should be going with. So I need negative yield spreads, and boy, did I not get them. So went long, and then into the end of the week, I used the daily yield spreads to catch a trade here. And you can kind of see how this works, right? Trades at the peaks and stops at the troughs. So that was a nice little trade, and it almost tapped me out there. But all in all, good week, good performance, good interpretations so far. And then I checked out ES because I know I set a monthly expectation on that. Which, I mean, check this out. It was like, hey, go down and then all the way up to 53.80. I'm like, wow. That is kind of a nutty set of expectations there, Joe. I wonder how many people, when they're doing their expectations, are willing to point out like, hey, I'm expecting close to 300, 400 points of movement for the month higher on the ES. And this, there's a lot of people who are like, oh man, this kind of just came out of nowhere. Oh my God, things are not looking so good. And here I am like, guys, I did this back on April 28th, which was like way back here. Like, this was before even the drop off, and I was also anticipating the drop off. So we had a good set of expectations going into this week. Here, I'm just gonna refresh my streaming software, double check that everything is going good. Yeah, everything's going good. Actually, real quick. There we go. My spectrogram wasn't looking right there for a second. Okay. So yeah, now I'm expecting into the end of the month a bit more of a pullback, some sideways movement. However, I am a bit cautious about that specifically. Because when you go ahead and you look at this, it's like, yeah, sometimes you get some moves higher. 25% of your closes next week are between R1.5, R2.5. So yeah, some bullish closes do come in next week, and they're like in the mid 5400s, which would be kind of nutty. But that generally implies there's a larger probability. Kind of like down here. I was expecting the close to be like this. I'd consider that a missed expectation. But again, on the month, I was expecting something more bullish. Yeah. It's going to be a bit more on the difficult side to kind of say, in my opinion, where S&P is probably going to go from here. We can look at some monthly levels, and you can kind of see, like, this is no man's land, right? I'm still one to say, yeah, probably high 5300s. Past that, like, you need something really obvious to help you set expectations that high. I'm going to turn the auto time frame back on. Let the thing reload. So yeah, you can see why I set the closing expectations to be around this area, but this is like a 200, 180 pip whip, pip window for closes on the S&P. So you got a lot of playroom here. Probably end up closing the month above R1. Oh, look, and that's the probability weighted pivot. Looks like we tapped the high on that. So yeah, the high probably will come in maybe a bit higher next week, and then we pull back. That's just the nominal expectation. We can get more information that makes things more risk on. We have Japanese CPI. We have flash PMIs. Oh man, yeah. I should probably say the biggest piece of news next week is probably going to be these flash PMIs and some of the inflation readings that we're getting. Like we're getting inflation out of Canada, Japan, UK. Let's see here. Let's go through some of these outlooks. In short, our key takeaways for April are: global economic conditions improved in April, inflationary pressures remained elevated and exhibited further signs of being sticky. Job markets will be key to watch after April, led by a small fall in the US. Flash PMIs will offer the earliest insights into economic conditions in May, right? Inflation data in the UK, Canada, Japan are also in focus. So you can tell that I read these things. May updated flash PMI numbers will therefore be eagerly awaited to gauge whether global growth momentum has shifted from the US to Europe, which is one of the reasons why Eurodollar looks really healthy even on the yield spread side of things. We will be keen to see whether May's PMI data alter these rate cut expectations. So if we get really, really good expectations out of the PMI data tends to lead GDP and an assortment of other macroeconomic information. The flash PMIs, if they come out good across the board for the rest of the G7, you can kind of see the composite here of what the PMIs look like. If they continue to improve, then yeah, things are likely to continue heading higher. This is really a point where I'd like to go and say for any guys who are really into equities to go and check out Wall Street Jesus. He did his stream on Thursday. And I really enjoyed his commentary this particular week because he just flat out said what I thought was, kind of itching at the back of my head. I'm like, can we have like a runaway thing here? And he's like, yeah, we could have a runaway thing here on a lot of assets. But going back to the title of this stream, it's idiosyncratic. So some assets are likely to pop and continue popping probably into the end of the month, and some assets are not. And you really have to understand what it is you're trading before you try and position yourself for, crazy pops into next week and into the end of the month potentially. This these next couple of weeks, a couple of assets can really take people by surprise. Not every asset is going to move that way, but the ones that do are going to catch all the media attention. And I'm just going to say, don't get blindsided by that. If you're trading, 10 or 20 different assets in your watch list, and 2 of them are moving crazy, high to the upside, don't try and transfer like those huge fantastical moves into the other 18 assets. You have to figure out, okay, idiosyncratically, one by one, which one is likely to actually pop off next? Which one? So doing stuff like this, reading your research, reading your outlooks, this can help a lot. Of all of them, I think USD CAD in the FX space probably has some room to go. You can see the yield spreads are super, super negative. Now, one little tidbit for guys who are new here, and you can also see wildly wrong on some expectations. I'm like, oh, we're going to see a weaker dollar, but nope. Or rather a stronger dollar here. Nope, didn't get that. I'm not always right on my expectations. It's important to draw your expectations so then you can see how things progress. It's okay to be wrong on your expectations. It's just a matter of, okay, I was wrong. What's the next thing? How do I improve? So tracking your expectations over time is what will keep you sane and not keep you from, well, I mean, you can probably repeat the same mistake over and over, but at least it will help you learn from those mistakes faster. Some people, you only need to make the mistake once. For some people, it was like a tiny little mistake. Oh, it's a tiny, like you give your mind an excuse to forget about what it is you should be learning. But having something documented, whether it's on your chart or in a trade log or whatever, having something written down to track your expectations over time, I think is a really, really great tool to improving your expectations going forward. Anyway, for the guys not familiar with these yield spreads, red here means the Canadian dollar side is getting stronger. Green here means the US dollar side is getting stronger. So red just means this side here, Canadian dollar getting stronger. So that would be risk on in this sense. You can see that's quite risk on. Let's go to a 12-hour. It also looks fairly okay. It looks quite mixed here. Looking at next week, though, there's some continuation odds lower, but you do have this big fat 30%er right there. So seasonally, you're getting something, I don't know, that either looks like this or probably like this, a super volatile week. And I wouldn't be surprised that the yield spreads are weakening here, frankly, because the expectation is, hey, inflation in Canada comes in soft, and that makes it easier for the Bank of Canada to continue lowering interest rates. I think there was something here from Wells Fargo. Yeah. Next week will mark the release of Canadian inflation data for April. Market participants will be closely watching the figures for any insights into the timing of Bank of Canada rate cuts. In our view, generally, easing price pressures should be a contributing factor to Bank of Canada policy makers feeling comfortable for an initial 25 basis point rate cut in June, which is next month here. Like in the next, 2 or 3 weeks, we're going to be getting a slew of central bank meetings. So if Canadian PMIs are improving on the price side, but not super great on the growth side, at least relative to the United States, and inflation continues to fall and wages, don't spike in Canada, It'll probably lead the Bank of Canada to cut rates. And at that point, the main driving factor on the FX side for dollar Canada would be whether or not growth is better in Canada than in the United States, which is arguable whether or not it is. But as we get new data going into June, which is the May data, we'll actually see if growth in Canada is picking up at a faster pace or not relative to the United States. And if that is the case, I'd be considering long dollar CADs into like first, second week before the Bank of Canada meeting, even if they do cut, because growth is returning and inflation is falling at a pace better than the United States, which would be good. But that's like 2-3 weeks out, not next week. And this is another skill that's important. Like, hey, have the foresight to see how potentially the next month is developing, what the major events to be paying attention to are, and then figure out like, okay, well, if that's what I should be expecting way out here, if I'm doing something along these lines, I can probably expect something like that and have a really good entry into potentially the rest of the month of June by holding long here. And, don't get me wrong. There's a lot of guys who do day trading, and well, most of the guys who I know who do day trading don't do all that great. This is generally, in my opinion, how I prefer. I'm not trying to give you guys advice here, so I'm saying, hey, my opinion, this is what I'm doing, because I can't see your accounts, I can't see your current positions, I can't give you any sort of meaningful advice. I can give you my interpretations of what I'm seeing, what I'm looking at these outlooks, and just deduce, hey, okay, with all this information from all these probabilities and outlooks taken into account, what are some reasonable expectations that I can set going into the week ahead? So while these yield spreads are improving on the Canadian side, I mean, sure, if inflation is improving, there's probably going to be some front running on Canadian dollar bullishness, so this chart going actually lower. I think I misspoke when I drew this, right? I meant probably something along the lines of that. This would be Canadian dollar stronger. So I would be looking for shorts probably towards the end of next week on the Canadian dollar after the inflation print. While the inflation print's going to be important for a Bank of Canada cut, the growth side then becomes a priority. Because if Canada doesn't pick up on the growth side, but their inflation is getting lower and lower and lower, then it's like, okay, when's the growth actually going to come? Because if the growth comes like in the latter half of Q3 and their inflation is really low, like, okay, sure, people are able to live much more easily in Canada relative to what they've had to go through recently. But if the country's not growing, the currency's going to essentially be going sideways or even drift and weaken against the US dollar. Like, the country needs growth. So the next things that I'm going to be looking for in the weeks ahead are some indications of growth. And to be fair, we can get that next week with the flash PMIs, if there are flash PMIs coming out for Canada. I'll be kind of refreshing my view on the economic calendar at that point there, probably over the next day or two, sometime probably before the market opened on Sunday in the FX space. So that's kind of the more interesting thought I've had here when it comes down to USD CAD. Historically, I really like trading the dollar Canadian. I really, really like trading it. Yeah. Let's go ahead and set some expectations, probably some more sideways-ish movement. And then let's say the flash PMIs and the inflation numbers come out in favor of the Canadian dollar. That would lead me to set this sort of expectation. And we can go ahead and timestamp this. Right, today's date is, I believe, the 17th. No, it's the 18th. One thing that I do like to preach about is, when you are setting reasonably good expectations and you have some decent tools to find prices of like, okay, given these expectations, what are some reasonable prices I should expect to hit? Like, don't be afraid of setting... Oh. Wrong pair. Don't be afraid of setting, big expectations. I'm kind of lucky in the sense that as I've done more of these expectation arrow drawings over time, I've taken the moment to kind of push myself. So generally speaking, along the route to reading outlooks and using stats to set expectations for myself discretionarily, as I got better and better and better, and I would week after week after week hit really nominal expectations, it's important that over time that you don't just fall for whatever the most likely odds are, that you inform yourself about what's going on in the real world and not just what's on the charts. So that then you can say, well, while the nominal most likely thing for this to do is XYZ, given this extra information that I see that's not on the chart, I might need to set expectations that are actually for ABC, which are more extreme moves. That's kind of the next, you could say, jump in interpretation skill. It's really not the easiest thing in the world to do, because you have to sometimes be thinking one or two steps ahead of what these guys in all these different outlooks are thinking and saying. Because they're not all explicitly going to tell you every single risk that's out there, right? It's one, trading is really, really hard for a reason. Yeah. Let's go ahead and set some, look, as much as I'd like to set more expectations like what I just did on dollar CAD, I do have one expectation that I'd like to set, which is this one here for the month. So real quick, if I just hide these drawings, I'm actually going to need them. So you see these red spots. So these red spots are where we have the highest density of highs for any given month, at least on Eurodollar. So we have, if I can grab my drawing, we have a peak down here. So you have a big chunk of highs that come in right off very, very close to the open. You have a peak right here. So these are like your more range bound months. You get your high around here. And then you have this here. So this is where you get your like really blow off the top bullish moves. So considering I'm looking at these outlooks here, and I'm looking at these yield spreads, and they're both telling me, oh, wow, this is really bullish. Like MUFG, they said in their weekly FX outlook, hey, we have longs from last week on Eurodollar that are still at play here. We're still holding them, and we still have good expectations on that. They really didn't say anything much more than that. And then I go and I read everyone else's outlooks. There was one thing that I read here from Nordea. This is a whole thing on like, hey, Eurodollar can go lower here into the summer. But they give all these contingencies and assumptions that I don't necessarily agree with. But this is why we read the outlooks, so then you can get a wide variety of views, right? Not everyone is bullish. Not everyone is bearish. And it's important to understand, like, okay, why are these guys bearish exactly? Do I actually understand the assumptions that these guys are making and what kind of data they need to prove their point? So you have to say, well, are these guys who are writing this outlook kind of putting the cart before the horse? Are they getting bearish too soon? Are there particular economic events that are still really good for the Eurodollar to continue appreciating here? But the risks that these guys are identifying are like, let's say, 6 weeks out, 4 weeks out, sometime after all those central bank meetings that we get in the middle of June. So this is kind of what I mean by, hey, you have to look at a wide variety of outlooks and opinions and commentary, and then figure out, okay, what's kind of the time frame that these guys are expecting these things to realize. And well, they say in the summer. Okay, so when does the summer start? Well, probably the latter half of June. So it's kind of interesting that as we get rip, roar, and tears higher on this pair, at least, these guys are like, oh, we're still expecting bearish movement. But real quick, so this is their new set of forecasts. So here's Eurodollar, spot 109. We're currently at 1087. So they're actually expecting something along these lines over the next, between here and 3 months from now, around the spot. And then 3 months from now, they're like, oh, this thing's going to fall like 500 pips in 3 months from now. So they're looking way, way ahead here. And this is something that can trip up a lot of people when they start reading outlooks. They read an outlook, and the outlook talks about, oh, you know, we're short. We have a bearish bias, not understanding that that bearish bias is like a quarterly bias. And here we are doing week by week things. So while this is kind of a more quarterly expectation, it's important to keep these things in your back pocket and be familiar with what these views are. So then if the data starts to change, you can be like, oh, things are starting to actually more or less align with this minority view here. And you can probably pick off a top wick, pick off a bottom wick, if you're smart enough and fast enough and on top of it. And a lot of trading requires you to sometimes just be in front of the computer at the right time, or have alerts set up at the right spot. Speaking of alerts, I'm going to set one here for 109. I kind of want to be notified when that happens. And that would be my expectation. I'm not so sure on closes, but we can go ahead and check real quick. Check out our closing expectations seasonally here on this pair. So you got some closes that are like really high up. I really don't think we're going to be going there unless we get some really insane momentum here on these yield spreads, just carrying us higher and higher and higher. I would, like that because I'm long. All's well that ends well for me. But more nominally, I would expect something like that going down. However, I'm gonna not set an expectation here. I'm gonna wait until the end of the week, and then I'm gonna look at what the expectations are for the week ahead here, and look at my probabilities for the week ahead here. Because in these sorts of situations, yeah, sure, you can go ahead and set an expectation and be totally willing to be wrong on your expectation because you got some new information, so you update your line or whatever. That's all well and good. But at this point in time, I'm like, well, where am I feeling most confident in setting an expectation? It's pretty much just this far out. Nothing too crazy. Outside of that USD CAD, which was just like, this thing's probably gonna, if we get some good flash PMIs and some good inflation data for Canada, these yield spreads could continue on with their negative momentum. We might not even hit this pivot here of going up. Might just continue moving lower. And these are pretty flat closing odds, so it's kind of like, I guess, where you end up closing on the month when you're starting the trade down here. So yeah. Probably now would be a good time for me to take some requests. There are a couple of pairs I do want to bring up here real quick, but if you guys want me to go ahead and look at an asset, feel free to post that in the chat. Aussie dollar, New Zealand. Yeah, you can see the yield spread started to weaken severely here, but they're actually still doing pretty all right. I don't know. As New Zealand is expected to maintain their higher rates, geez, look at these yield spread moves. Yeah, that was easy. Ooh, man. Hey, we got some chop here. Negative yield spreads. Oh, wow. A lot of lows for the month show up right around this spot here. Let's go ahead and check out our closing odds. Wow, decent number of closes down here. I'm not too sure we'll actually hit that, so maybe we'll end up bouncing. Let's check out some low odds here seasonally. Hey, that's the probability weighted pivot. Low, right there. Just tap that. Let's go ahead and check out the weekly real quick. Yeah, huge slide. You don't usually see that sort of move. 60% of the time, though, next week, the lowest between central pivot and S1. So this whole area is kind of game for guys who want to stay along. And it's kind of straightforward on the trade side. This is probably something that has to get swung into the end of the month. I'm not too sure we're going to get enough volatility here unless growth, the PMIs for New Zealand do like astronomically well. So yeah, now let's check out the highs real quick. Yeah, a lot of highs end up around there. So let's do an expectation along these lines here. And up. So that's just the nominal trade plan. I'm not reading too much into the different rates of change between Australia and New Zealand at the moment. This is just, I'm looking at my tools, setting a nominal trade plan. Yield spreads are still fairly positive. Okay, good. Nominal expectation set. If I wanted to actually trade this and start getting exposure, I'd start delving a bit more into the actual economic calendar here for the period ahead, and for, frankly, the next couple of periods ahead, to see if this swing for just next week can be carried out for another week or two, potentially all the way out into those central bank meetings occurring in the middle of June. See if there's potentially a good trend setting up there. We'll see. All right. With that all said, if you guys want to hang out with me in the trading group, go ahead. Feel free to sign up. There's a link to this in the description. Comes with access to all the trading indicators here, access to some one-on-ones, the yield spread curve, all that good stuff. Alrighty. Well, hope you guys enjoyed, and I will see you all in a bit.